Hello everyone, in this video I wanted to take a quick look at what is covered in the Complete Method stock swing trading course and a little bit about the details, just a little bit of an explanation to give you more insight into what's included on this page and in the course. So if you go to tradethatswing.com, you can see the trading courses under that menu option. If you're on a mobile device, this will be a compressed menu and you can just click on the menu button, trading courses, and the stock swing trading course. And what this is designed for is designed for finding quick pop trades or high momentum trades where we've already seen some bigger movement and we're jumping in to capitalize on potential further movement. So we're not necessarily predicting when a stock is going to bottom or anything like that. We're looking at when we've already had some nice moves up, then we look for certain patterns, and we could potentially trade the next move up if it sets up and forms these patterns that we're looking for. So, if you go through this page, you'll see some basic things, but this is essentially this table of contents and how the course is laid out and what's included. So we're going to talk about how to use this course. This is important because you're going to receive a lot of information, and I want to show you how you should actually go through and utilize this. We have a whole bunch of strategies. It's going to be very hard to learn them all at once. So in that, we kind of talk about how to pick one or two that you really like. Start working on those, and then once you develop a good foundation with those, then you can consider moving on and adding other ones. But we kind of want to focus in on a couple strategies we like, and then we can build on that skill set as we get better. So if you're new to the stock market, there's also stock market basics. We're going to talk about what stocks are, what dividends are, what earnings are, all those kinds of things, and just give you a basic overview of the stock market if you're totally new. Then we're going to talk about creating a trading plan. A trading plan is a personalized thing. It's basically your document that outlines how you're going to trade. So a lot of the stuff that we discuss in the course is going to go into that trading plan of yours, but it's going to be customized to you. So an example of that might be, I might have time in the evening to look at trades, and that's when I'm doing my scanning and looking for trades. Maybe you have time only during the day while the stock market's open. So, our trading plan might vary a little bit just based on how and when we can trade. Also, our risk tolerance, I might risk 1% per trade. That doesn't mean 1% of my entire capital goes into one trade. It could be a big chunk of my capital, but if that stock starts to go down, I'm only going to lose 1% of my capital. That's covered in position sizing next. How to actually position size your trades for optimal performance. Someone might be more risk adverse and they might only want to risk 0.5% per trade, or someone might be a little more they want higher returns, so they might be willing to risk up to 2% per trade or something like that. So our trading plan is going to vary a little bit based on our just personal circumstances or personalities, things like that. But still, the core foundation is what we're going to focus on in this course, and then you can have your own personal slight deviations from that. That even goes for the strategies. I might use specific settings. Not too many of these use indicators, these strategies, but there is one that uses indicators. You might find that you like different indicators. So we'll talk about that when we get to some of the strategies. But we basically talk about building your own personal trading plan for you. Position sizing we already touched on. That's how do you determine how much stock to buy. It's not necessarily based on how convinced you are a stock will go up or down if you're going to short, but it is based on a mathematical formula. And a really important concept, because if we risk too much on a trade, we can end up blowing up our account on a couple bad trades. If we risk too little, we're probably not going to get the returns that we want, which is then frustrating. So we want to consider exactly how much we're putting into each position, and we discuss how to do that. Trading tools just covers, what kind of charts you're going to need, anything like that. Most brokers do provide what you need. They provide charts and some scanning software. There is the option to upgrade. I like using TradingView charts, so I discussed that. You might also want to pay for a specific type of scanner that you like. There are some free ones out there, such as FinViz. I use another one called Stock Rover. So we have some options. You can go the free route and just kind of use the free tools that are out there. And you may also decide if you really want to get efficient and get exactly what you want out of a scanner and charting, you may have to pay per year, and those things kind of run a couple $100 a year. Order types to use. There are different order types. There's market orders, limit orders, stop loss orders, profit target orders, and we look at all those types of things, when we're going to use them, under what circumstances we're going to use them, and just so that you know exactly what type of order types to put out there for the trades that you're going to take. I talk about focusing on strong stocks. This is, as I mentioned at the beginning, this is mostly what this course is about. If you're looking for a stock that's fallen 90%, when is it going to turn higher? This is not the course for you. We are going to focus on strong stocks that are already doing well, because A, they're easy to find, and B, they already have lots of buyers interested in them. So we discuss why we like focusing on strong stocks, and it's mainly for those reasons already. And then we have our parameters that tell us when that buying is starting to die, when we talk about in each of the setups we're going to talk about. And also when analyzing the market, we can start to see when momentum is dying, and then that's when we back off. So basically, as long as these stocks are acting strong and they're presenting these types of trade setups, then we're willing to trade them. How to analyze the market. Go long, short, don't trade. This is, I think, a missing segment in a lot of courses, and in each one of these I also talk about some things where you might not want to trade, right? So we have a setup, but if market conditions aren't right, so let's say you have one stock that's going up and it looks really good, but when you analyze the market, this is looking at indices, and we look at some breadth indicators and a whole bunch of other things to kind of tell us the health of the market, and the market looks very weak according to this, the odds of that single trade working out are greatly reduced, because about 80% of stocks follow what the indices are doing and will adhere pretty well to these things that we're going to talk about in how to analyze the market. So if they're all really weak, your odds of a winning trade, on the long side are greatly reduced. And if the market conditions are really weak, you may be better off just not trading at all or going to the short side. So this is where a lot of people end up losing money, because they'll do really well when things are just shooting up, but then they keep trading. They just keep hammering, not realizing that conditions have changed, and then they give it all back, and you're stuck in this cycle of making money, losing money, making money, losing money, and you just never seem to get ahead. And this is one of the big reasons and a key part of this course, because you want to be able to look at the conditions, make great profits when the market's good, but then know when to back off, keep that money, and then wait for the next good batch of opportunities. So we talk about how to do that. Then we have a number of different patterns and strategies that we look at in the course. You'll notice new videos are added over in time and include new informational and additional details. This is the current table of contents, but it could expand as questions come in, or I find better or simpler ways of doing things, I add those to the course. So this originally started out as just these. So we looked at contraction patterns, cup and handle, double consolidation, and trend channels. Those were the original strategies in the course. And then over time, I've also added these other ones, the tater strategy, rounded bottoms, earnings gaps. So let's briefly discuss a little bit of what these are. So a contraction pattern, we have a big run up, and then we see a squeezing of the price action where it's basically that momentum's kind of died for a little bit, but we're waiting for that momentum to come back in. So we look for specific things in that contraction pattern to indicate that there's still some interest, and then we also look at where the entry point is and our stop loss point is for knowing when that movement, those buyers are starting to come back in. A cup and handle, same sort of thing. We have a big move up, then we have a little drop, and we start to move back up. And how do we capitalize on that next move? A double consolidation, again, same thing. You have an uptrending type stock. It starts pulling back, and then once it starts moving to the upside, we're looking for this specific double consolidation pattern, which just tells us, if this stock was still going to go down, it wouldn't form this pattern. So we like this. We discuss, again, where to put your stop loss, where to put your targets, how to get out of these trades, how to get into them, and what to look for when you might not want to trade this pattern. So again, looking at how to take advantage, and then also considering some scenarios where you may not want to trade simply because the odds are more against you. So the trend channel strategy, very specific guidelines for how to draw trend lines. So even if you don't end up using trend channels, as soon as you draw something on your chart, which is going to affect how you view that chart or that asset or that stock, you should have rules for that drawing because it's going to affect your trading. So in this trend channels, I discuss some rules for how I draw trend channels, that there's some consistency, and how I draw trend lines, there's consistency. And then again, same thing. And all of these, we're looking at risk reward as well. So we want to make sure that we are, I discuss risk reward a little bit more in a future video, but it's, or in the course, but risk reward is also discussed in each one of these things to make sure that, if we take a trade, we can reasonably expect to make 3 times or more what we're risking. So if we're risking 1% of our account, we should be able to make 3, 4, 5%. Or you could think of it in dollars. If you're risking $100 or $1,000, you want to be making 300, 400, 500, or 3,000, 4,000, 500 for that risk. And then that way, even if you're only right 40% of the time, 30% of the time, if you're right 50 or 60% of the time, you're still going to be able to be profitable. The tater strategy is probably one of the more simple ones. It's what I recommend for people who don't have a ton of time to scan. I do put out lists of super high momentum stocks, and this is more of an indicator-based method, which just basically tracks the price, and as long as it's kind of above a line, we're long. If it drops below, we get out. Rounded tops and bottom patterns, one of my favorites. This is a little bit different than maybe the typical rounded bottom or rounded top that you've seen. These would be rounded bottom or rounded top continuation patterns. We have a big move up, then we get this kind of rounding out of a pullback where the pullback, it's pulling back, but then it just starts to gradually move up. How do we capitalize on that? They can be very explosive patterns, but if we're too early, we could end up sitting in there forever because these patterns can take some time to round out. And again, of course, always managing our risk. Where do we put our stop losses, our targets? How to trade earnings gaps. This is a newer addition to the course as well. And we are just looking at super high stocks that have had really big earnings come out. How do we get in on that action? So At no point do I recommend holding through an earnings announcement while swing trading, because you can have a great looking stock and something comes out in that earnings announcement and it could gap down 50%, it could gap up 50%. We just don't know. It's kind of one of those unknown events, but we can trade after the earnings come out. So, you get a big move up. We have very positive news coming out from the company. And this is a pretty well documented thing called earnings drift, where if we get a really positive event, there generally is follow through on that event over the next several months, where the price will continue to act on that good new information because more people find out about it. It starts to get priced into the stock. So how do we take advantage of that? We look at that. So that's kind of one of those more exciting type strategies, I would say, where we're trading things that are sometimes in the news. There's a lot of activity around them, big price movements, and basically this strategy discusses how we take advantage of that. We look at scanning, basically how do you find these trades. So now you have a whole bunch of setups here to look for. How do you scan for them? We discuss when to use different strategies. Again, this was more for the original part of the course, but it still explains basically as these trends progress, you'll see these types of patterns first. Then as trends mature, maybe you'll see more trend channels. In really high momentum situations, you'll see the tater strategies. How to set profit targets. This is discussed in each course, but this just shows us how to fine tune it and basically why I've selected certain types of profit targets for the trades that I take, and how to look at movement and how that's going to play into setting profit targets. Managing reward to risk. As discussed, we want to make sure that our winners are bigger than our losers overall. That means even if we don't win a ton of trades, we can still be profitable. This was a video from quite a while ago that just showed what my typical night of scanning would look like and how I reduce my list down. Because if you run a scan, you might find 100 stocks. How do we get that down to 1 or 2 that we might be interested in trading? How to monitor, track, and improve your trading, super important. While it's nice to compare, I know a lot of people like to see just loads of charts from other people. That's not necessarily going to improve your trading. What you really want to do is look at your own trades and see how you could make improvements on those that you've actually taken, because that's for some reason what your mind told you to do. You can only trade based on who you are, and yes, you can improve that over time, but we can do that by looking at our own trades. And there's a section of the course which talks about how do you do that? What do you look for? How do you actually study your own trades and try to improve your performance based on that? So you can always, it's broken down into a bunch of different videos. You get, as soon as you purchase the course, you get access to a members area. The members area can be accessed anytime via the Trade That Swing website. Go to the members area. You'll also get sent a link when you sign up. You have immediate access, so even if you don't see the email right away, you can go to the members area, sign in with your email and the password you set up during registration, and you'll have access. And then check your spam folder and you'll have the receipt and details in there. And you have 5 years of access to the course for that. And you can ask for longer if you want, but it's just basically to keep our database of clients somewhat fresh, because most of what you will need you'll be able to learn from the course in the 5 years. So that's how everything works. You can ask questions below each video. So if you have questions, concerns, you're potentially looking at a trade, I'm not going to give you trade signals, but we can analyze it based on the details of what's discussed in the course, and then we can decide, yeah, is this a good trade or a bad trade based on what you know and what's discussed in the course. So lots of opportunity to ask questions. You're not just given the course and left to it on your own. You will see hundreds of questions, comments, trades that have already been discussed, analyzed in the course. So a whole repertoire, I guess, of new information too, or further explanations are available in those comments below the videos. So I really hope you enjoy the course, and we'll see you in the members area.